Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter like we normally do, seeing what people are sharing on the internet. I'll interject with my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in there, take a look, see what people are sharing. If you want to follow me on here, it's at @Finance. And if you want to join the community, we've got a website, finding-value.com. The website is really good for people they really want to make money in the markets. They follow companies. They want to figure out a strategy, figure out a thesis to follow, understand and learn the cycles that are at play. I mean, that's really what that is set up for. And then people talk on a Discord channel that we've got with each other about all this stuff. So if that seems interesting, if you really want to learn about the markets and you want to change your path in life, then yeah, definitely sign up. We've got a coupon code special that is active, and you can get savings both on the monthly membership and the yearly membership if you'd like to join using the special coupon code. Special is that code. So David Burrows, he says, gold continues to be our preferred asset for multiple time frames. This is gold versus the equal weight SPX. It is outperforming. Now, it doesn't mean that gold will go straight up. I mean, it's been going straight up, but it doesn't mean that we will just go vertical. It's a possibility, but what I see coming is that with the lack of investment alternatives, where people are not buying bonds if interest rates are going up, they prefer something else because you're losing money as interest rates go up. I think the stock market will go sideways or roll over for a period of time, and commodities and gold will do incredibly well. I mean, incredibly well. This is the same exact setup as the year 2000, as the year 1970, 71, and it's just a repeat. It's a repeat. So, under those conditions, there were companies that went up many fold in a 10-year decade time frame. I'm not talking like 4, 5, 6, 7 times your money. I'm talking 50 times your money, 100 times your money. And yes, I'm trying to go after those companies. Uh, there are strategies that I would deploy to do it, but this is just evidence that this is coming. It's all in place. Tariffs, I don't think, can stop it. It can delay it. Can we get a recession and delay these things? Very well could. But longer term, bigger picture view, it's all in motion. Kevin Bambro, he's been chatting. He's been pretty chatty the past couple of days here. He says, and bonds and stocks remain positively correlated in the rally. This should be well noted. Safe haven, no more, lots of less. Articles of confiscation reliant on central bank purchases. It's a Ponzi stock market. It's a Ponzi bond market. Invest accordingly. For me, silver remains a core holding. Physical metals remain a core holding. That's how I view it. Silver's got a little bit more of a monetary role than maybe platinum does. I know a lot of regular retail people like to hold silver. It is the cheaper option compared to gold. Gold's pretty expensive right now, well over $3,000. And silver, well, that's a little bit over $30, around $30. So yeah, I think silver's a great holding, and we're going to go way higher. The only problem is when you try to put a whole bunch of money in silver, it just takes up a lot of space. So that's the only negative I would say about silver. Paulo Macro says it's hard to stress how damaging to confidence this all is. You know, the way that he threw on these tariffs, the way that he just delayed it, the way that he tweeted. I don't know if you guys know, but Trump tweeted to go buy stocks before the news was released um, about the delay. I find this all a little bit weird, uh, very childish. I'm not. I don't like to get. I don't like to talk about politics hardly at all. But I mean, this guy released Trump coin onto the market and basically sold it somebody sold it. I don't know. It seemed like it was a some sort of scam. I would never even do that myself to anyone. I wouldn't front run anybody. I can't imagine a president doing that, but maybe he wasn't running it. Maybe he was. I don't know. But there is a bunch of stress to the confidence here. It is damaging. HFI says for quarter two, if WTI remains around $60 a barrel, we expect U.S. crude oil production to average 12.7 million barrels per day. This is a minus 900,000 barrel per day versus quarter two of 2025 consensus estimate. So they're projecting, if we were to stay around this level, a large decline in production out of probably just shale here, just U.S. crude oil. Brandon Balo says gold above 3,000 an ounce, crude oil below 60 a barrel. Miners just printing cash at this point. But yes, keep selling them with the rest of the bathwater. I think I don't think oil is going to stay at 60, guys. I think it's going to go up. I think it's going to go up bigly, maybe. Depends if we can get a squeeze going on in because there's a lot of people on here Twitter stating that they're going to go short oil underneath a certain amount, and we went under that amount. Now, I mean, these guys could get trapped pretty quick, and then they'll have to cover, which increases the buying pressure moving on up. We'll see what happens. Kevin, another one from Kevin. He says, I feel sad for the people who got shaken out of what will prove to be great long-term investment due to the games being played. That right there is what I worry about for a lot of people. I feel real sad for the people who got shaken out for what will prove to be a great long-term investment due to the games being played. The long-term investment that he's referring to are precious metals, commodities, oil, all of that. And with the games being played, the tariff games, it scared a lot of people out of their positions. And the one thing that I've learned through the years, and people ask me a lot of questions about this. They say, "How come you don't take profits? How come you don't sell?" And I tell them, "We're in a bull market. How do I know how to time the short term? I don't. If you get a really good position and you place it in some of these areas, whether it's 2020, 2021, and sometimes you put on a position and you're down in it. The worst thing to do in a bull market is lose the position, is to lose the position. I feel sad for the people who got shaken out for what will prove to be a great long-term investment due to games being played, losing the position. Now, if you look at what just happened, and this is really difficult because I went through it last bull market. If you get shaken out of your position and you see things go down, psychologically, what you want to do is you want to buy it when it's really low. And if news comes out or something occurs, the reversals can be dramatic. The reversals can go up 20% in a day. They can rip. And it's very hard psychologically to buy back in if you sold and then it rips higher, 20% higher from where you sold from. Now you're buying it back up at a higher place. And if you bought the same investments, now you have a wash sale. So now your cost basis is up there. It's way up there. Kevin says massive grift has taken place. I can only imagine how much people in certain signal chats have been based on their understanding of the tariff threat game. I mean, you could have made so much money on options if you put options on before the day that Trump announced that, and then put options in the opposite direction, knowing that news was going to come out of a delay. Oh my goodness. Would have been massive. But these are the games being played, and you have to be locked in with the thesis. You got to be locked in that we're in a commodity bull market. You cannot play the bull market with a bearish mindset. It just doesn't work. You can't be fearful. The way that I've set this stuff up is my bonds are metals. So metals are my bonds. That's where I get my safe haven, my confidence. where I don't have to worry about stuff. And then on my equity side of the portfolio, I go for it. Screw it. Why not? So, I mean, that's kind of how I play it. And I ride through it. And it's an emotional roller coaster. Some people can do it, some people can't. Here's Julianne Geiger says the EIA inventory moves. Crude was up a little bit, 2.6 million. Gasoline distillates were down. This is an inventory draw when you add up products versus crude. So we're still drawing down inventory in its aggregate. Shaban Garg says Canadian crude oil storage is at multi-year lows as demand for heavy oil remains high and major oil sands producers are in maintenance season. Low storage plus excess TMX and rail capacity plus lower Middle East barrels equals Western Canadian Select diff stay tight and ability to work through pipeline issues. So we've got low inventory, storage utilization is very low for heavy oil. I thought we had all this oil. Why are we down here at $60 a barrel? Well, it's not going to be down here for long, I don't think. The tariff pause is going to be very bad for a factory I started building last week. Yeah, this back and forth, it makes me think that tariffs are not going to go into effect because he's moving this all around, and there's no way to. I don't know how many people believe that they're going to stay or not, if they're going to stay or if they're going to remove them. I don't know. He's flipping things back and forth like a light. You know, you're flipping on the light, turning off the light, flip it off, turn it off. So yeah, it's very uncertain. Tavi says nothing to see here. If you don't own gold, you know neither history nor economics. Says Ray Dalio. Record weekly inflow to gold. February 25. Lots of inflows. Doge success is simply breathtaking. So, you know, I've got some friends that are really pro Trump, and they think that I'm very negative on him because I'm so crucial. Well, here's the data tracking federal expenditures in real time, daily data available through April 4th, 2025. And look at this. He's spending more money than 2024, at least on pace to. And this is real time. So looking backwards, he's spending more, and we'll see what happens. Now, are they really going to put these cuts into place, or is it just one big dog and pony show? And guys, I don't like to be political. I don't care. But I just look at data and I'm like, well, they're spending just as much. The economy is going to remain, this is going to be stimulative in the economy. Fiscal spending is running 8% deficits. That's what it is. Purchase applications data update. If other drama weren't happening, this would be a bigger story. Week over week is plus 9%. Year over year is plus 10%. Unadjusted numbers were up 24% year over year. But we never use those. Let's review the year. So mortgage purchase applications are ramping higher in 2025. I thought we were in a bubble. I thought that affordability was too bad. Why is this ramping? Is it interest rates? Maybe, maybe not. I mean, this is probably looking backwards. It says April data, so maybe it's the first couple of weeks, but yeah, we're way up, way up. Marco says, worked in markets under Greenspan, Bernanke, Yellen, and Powell Feds. Many, many market crises. Number one volatility analyst for 14 straight years. I have never seen a market crisis of this magnitude, yet Fed almost disinterested or even gleeful. The volatility, yeah, this is crazy. It's crazy going on. That's from Marco. Marco Kolanovic, I think he was at, I don't know if he was at JP Morgan, but I used to read a lot of stuff from him. Yeah, JP Morgan, that's who it is. Head Global Research. Here's John. It says, you've got to be prepared when you buy a stock to have it go down 50% or more and be comfortable with it, says Warren Buffett. Be comfortable with it. Know the company. So here's Larry Kudlow with the huge market prediction. It says, if you can get a couple three deals in the next 3, 4, 5 weeks. I don't know how many weeks, maybe 6 weeks. That's going to trigger a tremendous rally in the stock market because people are going to say, you know what, the Trump people were right, and this is exactly how it's playing out. Frankly, at this point, to me, all this recession talk, it's the greatest recession that never happened. The deals are being done. This is going to be huge. There is some validity to this right here that I was reading. I talked about it during our midweek update. He says, frankly, at this point to me, all this recession talk, it's the greatest recession that never happened. What is the ramification if the markets are pricing in a recession and one never comes? That means that there's a lot of things that are offsides in the market. I'm taking that opposite bet. I'm staying long in some of these areas where I don't think that we are going to get a recession, which means that some of these areas could get squeezed because everyone's positioned to the left, but really we're going right. So it's a lot of forward-looking potential recession being priced in that could come out of the market very quickly. The Fed is the only buyer of U.S. Treasuries. Few understand this. Oh no, I understand that. And this is a bad spot to be for interest rates. Drilling and completions in the near term are now being delayed. Production will start to decline. By our estimate, U.S. crude oil production will lose 225,000 barrels per day per month. Producers will weigh capex into second half of 2025, assuming sanity returns. I don't know if these guys have cut production yet. I don't know if they've cut capex. All I know is there's a lot of uncertainty around a lot of things. And with oil being as low as it is, we can very well see a reduction in production. Keep in mind too, guys, if we start to lose production, even if money comes back, or I should say, even if oil prices come back, we may not be able to increase production higher than what we've been at in April of 2025 or March of 2025. There are people estimating that we are going to start to decline in shale production in May of 2025, which is now. Kobiosity letter says, we now have rapidly rising long-term interest rates, GDP set to decline for multiple quarters, inflation data back on the rise, largest wave of tariffs in 100 plus years, consumer sentiment at pandemic levels, stock market in a bear market. What does the Fed even do here? Well, this is what's being priced in, is this. What if GDP doesn't decline? What if the long-term interest rates go sideways, not go up? What if inflation, well, I actually think that's going to rise. And who knows about the tariffs? They could change this any second. So a lot of these things are baked into the cake, and I do think a lot of people think this. And it's like these could be reversed very quickly. Maybe not long-term interest rates, but and GDP, this is kind of baked into the cake. I don't think that's set in place because you can always change the tariffs. And I think the decline of GDP is integrated with tariffs. Oil futures curve is now basically flat. Oil cargo is no longer losing value with time. When on board of a tanker or in a storage terminal, I could totally see a country like China take advantage of the lower oil price to rebuild strategic oil storage positions. They could, yeah. The problem is we don't have high inventories anywhere, and we're still running deficits. So it's hard to build a strategic storage position at these prices without impacting the price substantially. So I think that's going to just push oil prices higher. North Star. So an oil shock is coming. Totally agree with that. Yes, I know. Deflation, blah, recession, blah. Oils is plunging, blah, blah. Gold and silver are heading for a huge bull era. I don't care about fairy tale narratives. Oil will follow after this drop, way past 100 and in all likelihood past $200 a barrel. I totally agree. Totally agree. And that could start at any time. We'll get this drop. It's going to flush everyone out. People are going to go short. And then it's going to be a slingshot cheetah squeeze is on. And it's going to squeeze past 100. It's probably going to go past 200. It could even go multi $100 depending on what the geology is for producing oil. I think heavy oil's in trouble here, big trouble. And it peaked in 2018. They've been throwing in natural gas liquids to hide it. I think it's going to be a problem. And if they get in there and lower rates, if they try to print money or do stimulus, it's all going to rip. So I think that whenever this does break, it's going to be a big move and a lot of money is going to be made in energy. A lot of money. They're the strongest companies that are the most cheaply priced of anything in the market. Anything. And with $200 oil, I'm going to be laughing. I mean, laughing if we get anywhere near that. If we go 300 or 400, I mean, that's just going to be icing on the cake. Icing on the cake. And I agree. All up, all down, all up, all consolidate. And then gold's been ripping. So oil's been lagging. This is where we get the big oil to gold ratio that is just off the page cheap. It's the second cheapest time in history. The cheapest time was C19 crash when oil went negative. And we can get it the second cheapest time in history. And the companies, they're low risk now. They're not high risk. They don't have a ton of debt. They're well positioned to handle whatever the heck the market throws at them. And if we go up to multi-$100 or 200 or 300 or wherever it goes, we go up there. I mean, these guys are going to print. They're going to print more money than anything in the market. They're, I mean, their biggest threat at that point is going to be governments trying to tax them. That's the biggest threat. What did I tell you? Walmart pulls quarterly operating income forecast citing Trump's tariffs. Lots of tertiary impacts with these tariffs going on. Now, check this out here. ADRs going to zero. U.S. Treasury Secretary Bessent, when asked about removing Chinese stocks from U.S. exchanges, everything is on the table. Dude, that's crazy. Really? That is crazy. Here's one from Kevin. He says, in fact, they have the nerve to print all this money for the last 50 years and spend it buying approximately 46 trillion of more goods than they produce for the rest of the world, inflation adjusted. So it's pretty amazing or amusing when you understand what's actually happened. The reality of the situation is that USA created trillions out of thin air and spent it around the world. But now they're pissed off and are spewing a narrative that they've been ripped off, completely ignorant of the fact that people around the world worked their fingers to the bone in sweatshop factories, making goods for them only to receive dollar bills that just rolled off a printing press after a few keystrokes by a banker. That is pretty jacked up. Here's Spencer. Spencer says, and the absolute dumbest part of this entire ordeal, the effective tariff rate we paid the rest of the world was 2% in January of 2025. It will be 6% by tomorrow. We took completely imaginary problem that countries were unfairly tariffing us and turned it into an actual problem. He says elect clowns get a circus. So announced retaliatory will raise the effective tariff rate on U.S. exports from 2% to 6% if sustained. This is from Cuppy's Corner. It says, watch bonds. And I agree with this. This is fiscal dominance. Fiscal dominance, and you get in this loop. The loop is higher interest rates, which creates higher interest expense and refinancing costs, which creates a larger fiscal deficit. The larger fiscal deficit then creates or needs more money printing, QE, direct monetization, which then impacts and leads to sustained inflationary pressure, which then puts more pressure on increasing higher interest rates. And then you just go in this circle over and over and over. And that's the problem. And then people are hitting the eject button on the entire system and going into gold. And if you notice, the money flows going into gold above because of this doom loop. This doom loop will also send oil to the moon because as money comes into the system, it is demand. It is credit creation demand. That demand says, well, I want to buy something with it. Oil's the number one commodity. It's used in everything. So oil, under these highly inflationary periods, go up along with gold and silver and other metals like platinum. And there's your fiscal dominance and your doom loop. This is Alfonso. He says the percent of S&P 500 stocks above their 200 MA just dropped below 15%. Historically, a buy signal comes when it climbs back above 15%. That's your trigger. Check it out. And we're right there at that low point. And obviously, I'm reporting this after it occurred, but we had a big surge in the S&P. But these were generally good areas to be buying as low as they are. OCTG pricing rising in America, adding pressure to shale E&P's cost structure on drilling and completing new wells. Massive declines on legacy production and the reality of new wells that may not even pay out on a full cycle basis after land acquisition costs. The decrease of U.S. oil production. So OCTG is North American Steel Pipe 5.5-inch spot index, U.S. domestic hot rolled coil steel, and they're surging higher here. And they use a lot of steel for pipes in drilling. A lot of the laterals that they do horizontal laterals. They've been going multiple miles horizontal on a lot of their drilling now, 3, 4, 5 miles across, I guess. Jordan says gold divided by CPI is a strong indicator for gold stocks. So naturally, silver divided by CPI is a great indicator for silver stocks. Data is delayed until March CPI in 2 days, but I've sketched in how silver CPI will look. Look how closely SIL follows silver divided by CPI. Maybe silver divided by CPI is building the handle part of a cup and handle. So a handle and then a little handle here. Silver taking out 35 should be a significant as moves in 2020 and part of 2011. So as we break silver versus the consumer price index, it's going to bring the mining companies with it. We're going to see a huge surge in mining companies. I'm positioned for this. I am massively positioned for this. So hopefully that occurs. Here is if Buffett liked Oxy at 60, he should love it at 37. So he's been buying there. He bought a little bit down here. And then we have this big fallout at the end. No one's perfect. No one is going to nail this perfect. This is one of the best investors in the world, and he didn't nail the bottom here. He had to ride through some pretty bad volatility. He was buying it probably because it was a great value. Came down, he bought some more, and then now it's even a better value. He didn't time it perfect. What are the chances that you will time it perfect? Probably pretty low. And even myself, to time it perfectly, it is impossible. So what is the strategy? The strategy is to buy undervalued assets in a bull market. That's it. You can't time this perfectly. Even the best investors can't do it perfectly. But you can get close. You can try your best. And that's all you can do. And then you wait for the bull market to carry you up. Just in, the Federal Reserve will not cut interest rates this year, cautions Morgan Stanley. And it says Morgan Stanley says Fed won't cut rates until next year because of tariff impact on inflation. Here's more from Kevin. He says, I wonder if China will be dumping U.S. Treasuries hand over fist and buying precious metals. I think they know what's going to happen soon. They know what's coming next. Rate cuts and printing of money, devaluation of their Treasury holdings. Because that's go-to solution for the Ponzi economy that is being operated by a madman. Yeah, and he's got a surge in silver price in after hours here. So more information or more opinions. Patrick says it's getting ugly out there. Expect the Fed to cut rates real soon, then cut them again and again. Well, that's if we go into recession. We could stay up. We just saw a big reversal in the 2-year yield moving on up. Today we did. A note from the S&P Global Commodity Insights says if WTI were to plunge to $50 a barrel, there could be a decline of 1 million barrels per day of U.S. onshore production over the course of a year. And there's that big, this is the decline curve. So you can see how rapid these decline. So that they're adding on all this new production per year. That's the shaded different colors is a yearly production. And you can see that the declines are getting even more and more rapid, almost like they could go straight down. And that is what the problem is with shale. If we get too low of a price and they cut back on drilling, we're going to see a big decline in production, which is supportive of higher prices. Peter Schiff says it's. Oh, I already went through that last time, so we're going to end it there, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website special coupon code, and that's all I've got for today. So we'll catch you next time. This is Finding Value.